Welcome to another Heart to Heart discussion. I'm Cheryl Jackson. I'm excited about being here today. And listen, we've got a great conversation that we're going to talk about tonight. Home ownership in 21 days. You can achieve home ownership. And so join us, tell everybody about it. Why don't you go onto your page and share. Tell everybody we're about to delve into this great conversation, especially if you're looking to be a new homeowner. So let's jump right in. Our first guest is Sinai Baldwin. She is a native of the DMV area with strong roots in the community, with a passion for assisting others achieve financial freedom via economic prosperity. Over the past decade, she says she's assisted thousands of families secure life insurance policies. She said her focus has transitioned to assisting first-time home buyers and educating families of the importance of home ownership via credit counseling and obtaining home loan financing. While assisting families secure life insurance policies, the most common denominator was the lack of financial education. She says her mission is to provide knowledge-based credit counseling to ensure all families are equipped with the tools necessary to achieve their financial goals and a foundation for future generations to flourish. And we're excited to have her today. Hi, Cenae.
Thank
How are
you. Hi,
you?
Cheryl. How you doing? Thanks for having me.
I'm excited about this
I'm excited
conversation.
to be here.
And listen, I love your passion to reach back into the community, to tell people. And you're right, we don't always have the financial literacy that we need. And so
Absolutely.
today's conversation, I think, is going to help a whole bunch of people.
Absolutely, it will.
All right.
Thanks for
So
having me.
you're welcome. Our next guest is Etika Anderson. And with over 10 years of experience in the mortgage industry, Rodell Anderson. Is Etika your real name, Rodell?
It's Etika Rodell Anderson, but everyone
Got
out
it.
there
You go
knows
by
me
the
as
middle name.
Rodell.
Okay.
Etika's a little original name, so it's tricky to pronounce. I go with my middle name, Rodell.
Both names are beautiful. So
Thank
anyway,
you.
Rodell has a wealth of knowledge pertaining to processing and underwriting expectations of the loan file. Her belief is to emphasize the empowerment of a borrower from the pre-application credit phase to post-closing budget skills. Her expertise yields creative solutions for various financing with a resolute that everyone deserves home ownership. And I think that's so absolutely awesome. One of the things, Rodell, that I really have been emphasizing to my children is to own their own property, own their own land, and they're relatively young to get started. But I think that the most major thing that my husband and I was able to do is to become a homeowner. So I'm
Absolutely.
excited to have you guys
So
both.
important.
Yes, thanks for
Yes,
having me.
thanks for having us.
Listen, if you are watching via Facebook, if you're watching via YouTube, share this information with your whole timeline.
Share,
Tell
share,
everybody
share.
we're going to be talking about this, and we want your comments and your questions, right? So we want you to interact with us. And listen, I'm a little partial because I love these girl panels that we do all the time, having this wealth of information from all of these powerful women. Tonight is not going to be any different. Before we jump into our questions, though, I do want to dig deep into your background a little bit. Tell us, Cenae, we read it in your bio, but tell us, what kind of drove you from your own words to be a part of this industry and why you're so passionate about teaching our community about home ownership.
So, like you mentioned, I was dealing with, with life insurance for a very long time, and the common denominator was the lack of financial education. So, when I'm actually going in home to people's home and sitting down with them, they just didn't have the tools necessary. So, I wanted to be able to provide those tools not only with life insurance, but now into the mortgage industry, and speak with my clients about the importance of actually being a homeowner is truly important. And having real estate and being able to invest in real estate is an important deal, not just only having life insurance. So when I'm sitting down with my clients, they're like, I don't know, the path on what I need to do. And that's where I come into play. And I'm glad that I can be able to help clients, help them within the mortgage and be able to get them approved and qualified, and just sit down with them and have knowledge base and get them on the right path.
Yeah. Because oftentimes the lack of knowledge is the thing that keeps us from getting where we need to go. And
Absolutely.
all of us could pretty much say that in the beginning of our, becoming adults or adulting, as I say to my children, we had no clue. We had
Yeah.
no clue, right? So either our parents were teaching us, steps. My father passed when I was 12. So he wanted to teach us as much as he could before passing away about financial literacy, about bank
Yeah.
accounts, about savings accounts. But you can
Absolutely.
only learn but so much. And even just kind of following my mother, even, my husband and I, we had to start from scratch. Like,
Yeah.
how do we gain wealth? How do we build our finances? How do we save? And unless you're in the industry, you don't always have that knowledge.
That's
So
right.
to have
You
you
know,
in our corner is great.
And I
yeah,
think
my father passed away with, not being not being a homeowner or no life insurance or, just not financially educated. And, we don't fault him for that. He just knew what he knew,
Right.
and, now and I'm in position where I could be able to, show people the right path on being able to be a homeowner and taking those steps and what needs to be done.
I love that. Rodell, let's talk about your passion. What made you jump into this industry and do what you're doing as well?
I think just to piggyback on what you both are saying, it's imperative to start the home ownership process prior to even thinking about adulting, if you will. It's nice to hear you say that you've already started talking to your young adult children about this process because it starts with credit. And credit
Mhm.
doesn't start with purchasing a home. It starts with getting a secured credit card, perhaps in college, at 18 years old. So the lack of knowledge, particularly within our community, just empowered me to want to empower others to get on this journey and do it the right way. A lot of times
Absolutely.
I see people falling apart the day before closing or the week before closing. It just doesn't work out. I hear clients telling me, well, hopefully, maybe I'll get it. No, I want to strengthen our community where they know they're going to get those keys to the house when they start this process.
That's
That's
right.
so good. Because you're right. In college, they're like predators, like this whole credit card line of people out here ready to sign you up for credit cards, not really knowing and showing you what to do with your credit cards. When you're in college, that's lethal because you're buying pizza now with credit cards. You're doing all this stuff. You don't have enough of books, you throwing it on your credit card, not
Absolutely.
realizing you got to pay this money back or it's going to haunt you for the rest of your life.
Yes.
So let's talk about it. First off, thanks to everybody who's joined us. I see Karma Wigfield, I see William Taylor, Karen Jackson, Michelle Vini. Hi, sis. I see a lot of my great friends on our Facebook page. Make sure you guys share this and leave your questions. Like if you have questions about home ownership that we are addressing, I want to be able to share it with these wonderful women who's going to give us the information and the tools we need. So, Cenae, let's jump right in.
Sure.
What's the lowest credit score that will allow you to purchase a home?
So our lowest credit score is a 550 with our FHA products. However, once you complete your initial 1003 application on my website, that's afncorp.com/Sinai Baldwin, or by calling 301-919-5221. Um, and your credit score does not meet our minimum score requirements, I will provide you with credit counseling, which would include a credit rescore and a FICO stimulator to ensure all clients uh, will meet their minimum requirements. So basically, you're wondering like, what is a credit refresh? A credit refresh is basically I obtain your credit report and we go line by line to ensure all accuracies and to determine what credit balances will need to be paid to increase your credit score. And then for our credit stimulator, once you have completed the initial review for our potential borrowers, we will complete a 30-day action plan. And once we complete that 30-day action plan and agreed upon the liabilities by paying off those liabilities, we will rescore your credit to ensure you meet the minimum credit score requirements.
So
So our
that's
credit
awesome. So 550, you can have a 550 credit
550,
score.
yeah. And we have our credit vendors that provide us specific tools which allow me to immediately identify the areas of weakness on your credit report. So you just need a 550. for,
Wow.
our products. Yes.
Wow. And that's where it starts because we're talking about home ownership in 21 days, and this is the process towards home ownership. But once you get your credit in order, you can do so much more because once you get into your home, you're going to have to furnish your home. You're going to have to get, have your stuff in order to get your utility bills. You're going to have to find ways to, and then even job opportunities right now is based on some people's credit scores,
Yeah,
right? So some
absolutely.
people can't even get jobs unless your credit score is at a certain point.
Yeah,
Yeah.
I had a friend or a friend a few months back, and her credit score was just not where it needed to be. And I was able to provide her. She had like a 520, 530 credit score, and I was able to provide her credit counseling and go line by line with her on her credit report to point out what needs to be paid, what liabilities had to be paid, and she executed that plan. And
Wow.
because her executing that plan, she is now currently a homeowner.
Wow.
It's
That's
just a
dope.
matter of taking those steps and putting them into play. And now she's a homeowner and she's
Mhm.
excited about it.
Yeah.
I love it. So Cenae gave you guys some websites to go to, phone numbers to call, and of course you can see them scrolling at the bottom of our screen. So if you didn't get them as she was, sharing, look at the bottom of the screen, and all her information is right there. So do you need to put 20 down to purchase a home? Because a lot of people not only need good credit scores, but sometimes they think that you have to put a huge amount of money down, or that you may have had to save some money in order to put down.
Cheryl, I get this question asked a lot, 20% down, that's a lot. So the answer to your question is no, not necessarily. We offer several first time home buyer programs, which require no money down. For example, we offer programs such as our FHA programs, which only require 3.5% down. We have our Veterans Administration, our USDA programs, which require no money down, and our conventional little as 3% down. Additionally, we also offer down payment assistance, which will assist you with the down payment amount. Our down payment assistance program can be paired with our FHA products and our conventional products. And upon review of your credit, your income, your assets documents, I will present to you all the available options that you qualify for. So, no, you don't need 20% down.
Not at
That's
all.
awesome. So Michelle Vini asked a question that I was going to ask you as well. Are you just servicing the DMV area or any area? Of course, this is the World Wide Web, so folk are watching all over the world. Or do you have down payment assistance programs for folk even outside of the DMV?
So we're servicing the whole all areas, not just DMV. This
Hmm.
is for the entire states, and that's the good thing about what I do is that I just don't limit to the DMV area. Everyone wants to be a homeowner,
Yeah.
so this applies to everyone. They're just not in the DMV area. And yes, we do offer down payment assistance programs.
Hmm.
Absolutely.
So Rodell, this is for you. So what if you don't qualify for the down payment assistance program?
So there's always other options besides down payment assistance to bridge the gap. You have seller's credit. Let's assume that the seller's selling the property for 300K, but the appraisal comes in at say 315,000. That wiggle room, that $15,000 extra, we can really negotiate and embed the down payment money within a seller's concession, seller's credit. As Cenae mentioned, that we have credit counseling. So ultimately, if you don't qualify for down payment assistance, we're going to run you through a credit counseling program to get you geared up to get some sort of assistance as well. So there's various options. There's also something called a gift that people can turn to a family member or certain sorts of defined friends and get assistance through, some sort of financial gift coming from a friend or a family member as well. So when we have lender credit, and we do all kinds of creative kind of financing to bridge that gap and make sure if you want the keys, you'll have the keys. Yeah.
That's so good. That's so good. That's answering a lot of questions. And you guys have some great questions. So again, if you're watching and this is referring to you, make sure you jump in and ask the questions that you need. Again, Cenae has all her information scrolling at the bottom. So if you have any questions. All right, Charlita Wiley says, do you participate in the Home Ability Program for disabled first-time home buyers in Maryland?
Well, with that, what happens is if there isn't a relationship with a particular down payment assistance program, you bring that forward to us and we look at the criteria for that program and we reach out to that agency and we merge with them, sort of thing. So especially if you're a veteran, ultimately you have access to so many programs that we receive as well.
Oh, wonderful. Wonderful. So you have a list of programs that you'll suggest, but if there's a program in a specific state that somebody knows about, you guys can do the research for them.
Absolutely. Connect with them, make sure they fit our criteria and bring them aboard as well.
Got it. Got it. So why are you different than any other lenders, Cenae? Because I know that, when you're talking about a lender, then they have these other programs as well. But American Financial Network is a little different. So tell us how you're different.
Yes, so I'm a little different because I offer an express 21-day closing. As you see, the topic of today is 21-day closing. I'm 24 hours with my clients. You call me anytime, any day, and I'm there to make sure that we are getting on that path to home ownership. Our finance options include, VA, FHA, conventional, non-conforming statement loans. Also, like I mentioned, our down payment assistance programs may also be available for you to purchase your home with no money down. And whether you have perfect credit or even credit challenges, our loan products are catered to your specific needs. So everybody's different, we cater to everyone, so just obtaining with a FICO score as little as 550, I'll provide you free tips and requirements to meet the minimum required guidelines that suit your needs. I can help you determine which program, best fits you, put you in that path. The 21-day express, is streamlined by first going to my website and completing the initial 1003 application. What you see my website there is afncorp.com/Sinai Baldwin, or by calling me at the number provided, 301-919-5221. And by completing that, I can be able to put you on that path for home ownership within 21 days.
I love that. And so I think the difference too that I'm seeing between American Finance Network and any other lender is that, if you're with a lender, they're not going to help you get to the credit score. They're not going to help you. They're going to work with what you have, right? And try to place you in a loan with what you have. But it sounds like to me, you guys take us by the hand and you walk us through the process of what it takes. So the rejection is not going to be as pivotal, or it's not going to be as prevalent, because you're going to do whatever it takes to help us get there, right? You're going to give us answers. I wish I had you guys when my husband and I were home.
Right.
We're 25 years in now, but
I know that's right.
When we first got married and started looking for a home, we had to do this thing by scratch. Yeah. And we made a lot of mistakes. We had, multiple loans. We had a balloon. We had, you know what I mean? We did, because we were first time homeowners and he's a veteran. Like, we could have used so many different products that the lender didn't share with us. They wanted to give us the biggest product that they can get interest off of, right? And they weren't really trying to help us. I really love what you guys are doing, because that's not the case with this, right?
Yeah. You scrub the loan up front. And I think that's critical. Outside of having good credit or getting to a certain score that we can really benefit the interest rate for the client, we look at the totality of the individual. We have ITIN programs where if someone doesn't have a social security number, we still can work with you in certain programs. We look at the bank statements. We kind of package self-employment, you name it. We package that person, because in order to hit that 21-day mark, it's an expeditious process, and we have to do upfront scrubbing and vetting to make that process go very smooth to get to that finish line quickly.
Oh,
So
that's so good. So
Absolutely.
Michelle Vini has a really good question as well. She says, "Do you have the no doc loans for self-employed
we do.
persons?"
We do, yes. And like I mentioned earlier, everybody's situation is different. So, by calling me and going to my website, I can be able to answer your questions and, map out areas that needs to be addressed, like the no document loan. We provide a lot of different programs. And, Cheryl, like you mentioned about some, the lenders and, what I was finding too is that additionally, most lenders, when they look at your credit report and they see that you don't meet those minimum score requirements, you know what they do? They decline your application. And here we do it differently. We don't decline your application. We work with you. And I work with my clients day by day, hour by hour, second by second to make sure that whatever was going on, we're going to get you in a home.
Mhm.
That's my goal. Everyone needs to be a homeowner.
So that was going to be the next question. What if you're not, what if you don't qualify for a loan right now?
So, good question, Cheryl. And I'm gonna share a story with you. But the first step is after you complete your initial, your 1003 application by going to my website, afncorp.com/Sinai Baldwin. And once you complete that application, and I have reviewed your credit, and if for any reason that you do not meet the minimum requirements of the 550, I immediately start a free 30-day evaluation with you. And the 30-day evaluation consists of our 30-day credit counseling process. The credit counseling process includes, which I'll go line by line to ensure, like I mentioned, all your accuracies. I will have the opportunity to provide you feedback in regards to old collections, charge-offs, or any derogatory accounts. At that time, you will provide me a letter of explanation. And that letter of explanation will be addressing each of those derogatory items. And in addition, I will provide your feedback going over, the current open trade lines to determine what current available balances on your credit report. So I'm working with you line by line. I'm pulling your report. I'm seeing what's on your report. And we're going to talk about this to get matters resolved so you can be able to qualify. Our credit counseling typically takes about 30 days. After your 30-day evaluation and all your agreed upon liabilities have been paid, that would allow your FICO score to increase. And by your FICO score increasing, now I would navigate you through the process of being a homeowner. So we're working together. We're a team here.
Yeah.
I love that. You know why? Because oftentimes, if you haven't watched your credit report, or if you haven't seen your credit report, right, you don't know some of those charges are not maybe derogatory, right? Some of those charges that's on your credit report may not even belong to you. We
That's
found
right.
a number of discrepancy once we start pulling our credit report and start going line by line. And if you don't know how to discrep them, they're just going to remain on there. If you don't know how to do it, if you don't know the process of cleaning up your credit yourself, you need people like Cenae who's going to be able to go line by line and say, "This is how we get rid of this. And
Let's
this
get
how
you in
we
this
do it."
house. Yes.
I like it.
Yeah,
I like it.
I had a client who I sat with her, months back, and she was explaining to me how she just think that she wouldn't qualify. And I go in her home and we're talking, and she said, I'm paying rent here. So I asked her, I said, well, how much are you paying rent? She said, I'm paying $2,700 a month. So
Girl.
immediately I said, well, how long have you been living here? She said about 3 years or so. So I immediately broke out my calculator. And I said, so you mean to tell me in 3 years you done paid over $97,000 in rent? She said, yes. She said, but I don't think I will qualify. So I, gave her my website. We were able to pull her credit report. I was able to go with her line by line. And, now she's in the process of getting her home, So she followed exactly what I told her. And now she's going to get ready to be the homeowner in the next few days. We're
That's
getting ready to
so
close her in the
awesome.
next few days.
That's so awesome because quite honestly, 2,700 is way more than what I pay for mortgage.
Yeah, it's a lot of
Way more.
money.
And you're gonna be paying somebody's more. If you're not paying your own, you're gonna be paying somebody's mortgage.
That's right. And why put that in
And
mortgage when you could put it in your own?
absolutely, absolutely. That is crazy.
You
Yeah.
know,
That's crazy.
there's nothing on the credit report that we can't tackle. I mean, we can even finance someone with a bankruptcy that's not discharged. So the way I tell individuals is it's all about these mitigating factors that we just have to maneuver between that and your income. You're going to be able to get something. It may not be what you want if the income doesn't allow you to go that high, but perhaps looking at something a little lower. The credit is not the part that although it intimidates individuals, it's really not the component that makes or breaks. It's how much house can you really afford.
Mhm.
You know? If you've got a $55,000 salary, then we got to gear you and steer you in a direction of a house that's compatible, so you can't be house poor. But the credit report, no one out there should feel like I've got a bankruptcy that's not discharged. I have all these collections. That piece there with maneuverability can be navigated. It's how much house you can really afford. That is where we need to focus that person to make sure they connect to the right piece, if you will.
That's awesome. And that's great to say because I was going to ask you about bankruptcy. I had a conversation with a friend not long ago, saying we have this one life, so you could start over with bankruptcy, right? I'm not saying that everybody should file bankruptcy, but they talked about how they had to in order to restart or rejump their financial portfolio. And now, quite honestly, their company that they have is making millions because they had to start over. But when you start over, but don't just stay there, because if you're in that bankruptcy, if your credit score is still low and you do nothing about it, you're going to pay high interest. You're going to pay more money. You're going to be paying rent because you think you don't qualify. You're going to always be that person that's paying more than if you do something about it. And this is how you do something about it. So even if, Rodell, that you're discharged from bankruptcy for 2 years, you can still qualify for a home loan, is what you're saying?
Absolutely. Chapter 7, 11, 13, even before the discharge. The key is not having any new accounts that are derogatory or in any kind of negative standing prior to the discharge. We can work with that. It's all about the scenario and working with that. So it doesn't even have to be discharged for you to be able to qualify.
That's awesome. So Shalita Wiley has this question. She said, I've been monitoring my credit for the past 11 months, and I've been able to pay off a lot of my debt, but still have a couple medical bills to handle. So her question is, do medical bills weigh heavy as other debt?
It doesn't. It doesn't at all. And actually the laws just recently changed July 1st on how medical creditors can, put information on the credit report. They can't. So that just happened this month.
Wow.
Yeah. So they've changed it in a way where although it's your debt, it doesn't impact your score like how you see it there. We as lenders, we never really put too much emphasis on medical as well either. So that shouldn't be a problem. How you pay your debt, make sure when you're paying these collection accounts that you negotiate with the creditor to be able to get not necessarily just a paid derogatory status, because that doesn't really increase the score to pay it to just zero and have still that payment history of derogatory payments. You have the ability to negotiate with that creditor to have them stop the bleeding, if you will, and change those not to positive payment history, because that's not quite true, but to a neutrality, and just have it be a neutral ND. It's called no data. They have the ability to change those negatives to an ND, and you have the right to negotiate that in your payment when you're paying it off.
That's awesome. I'm writing notes, right?
Yes.
Because I've paid off a lot of things as well. I mean, thinking that you're doing well, but those things are still sitting on your credit report. And then in times past, we were told wait 7 years or wait so many years before it leaves. But if you go back to ask the creditor to change it to no data, then it wipes it from the credit report.
Right. And you have the leverage when you're paying. After you pay, at that point, they're not receptive to any real negotiation. But when you're getting ready to pay, you have that leverage to say, hey, let's settle this debt. But part of that settlement is to convert this payment history to a neutrality, no data status, so it doesn't continue to hurt your score, sort of thing. So that's definitely feasible.
And what
So
I'm
Michelle
finding,
B asked about the no doc question, right? About for I'm sorry, did I cut somebody off?
no, not at all. Go
Oh,
ahead.
go ahead. Okay. So Michelle talked about the no doc loans, right? For self-employed. So if you're self-employed, can you still qualify to purchase a home? Of course, if you have the no doc loan, but let's talk about self-employment, because we probably have a lot of people that's watching now and just wondering, how do I get to buy a home if I'm self-employed?
Self-employed is you can definitely buy a home. With self-employed individuals, I always like to get them like 2 years before they even think about buying a home. Realistic, in a perfect world, that would be ideal. Why? Because with self-employed, not no doc, but documentation self-employed individuals, we're looking for 2 years worth of income tax, personal as well as business. And that's where it's a slippery slope, because it's like Uncle Sam's on one side and your dream home is on the other side. When we're not there and you're filing your taxes and you're writing all those deductions off, they come back to haunt you when it's time to buy a house, because you can say you made X amount of dollars for the year, 100K for the year, but by the time you finish deducting to avoid or to navigate your tax bill,
Yeah.
we're going to take what the bottom line is. So if you deducted, out of that 100K you made 65,000, well, you just lost that income. Now your $35,000 income, and that may not get you your dream house, sort of thing. So that's where it gets a little tricky, where self-employed people, talk with your accountant, talk with your lender, reach out to Cenae, because at the end of the day, you've got to kind of balance the two on how much you're deducting, how much you're trying to avoid paying IRS versus how much income we're going to give you credit for.
Absolutely.
Yeah.
Because the deductions is what really helps with your tax refunds.
Yes.
But it might hurt you in the long run, is what you're saying when you're trying to purchase a home.
Big time.
So
I see it all the time.
having somebody walk you through that process to set up your years is great, right? So next year, you know how to navigate. You'll know how to navigate your finances, how many deductions you should have, how much money you want to qualify for as a self-employed person.
Are you paying yourself a W-2 as a self-employed business owner? Are you paying yourself a W-2 as well to try to offset those business deductions from the Schedule C and the various schedules? There's so many ways that you can kind of, maneuver around to try to maximize the income that you can get credit for to get the house you want.
This is so good. This is so much great information. It's I always say this, that when you work in a specific profession, you know more. Like I could tell you everything you need to know about radio and media, right? but for the financial situation, I don't have all those answers. So you need a professional. You need somebody to help you, and it's okay to have help. And so thank God for American Financial Network and for Cenae and for Rodell and those who can help us. So Cenae, let's talk about, God forbid, because I'm a big marriage advocate. So God forbid the divorce.
Yes.
You had to get divorced. Life happens. So I'm not
Life happens.
that, right? So what if you had to have a recent divorce? I know that when I first got married, I told my husband, I'm so sorry, because I came into the marriage and my financial situation ain't look so good. Where he had impeccable credit, right?
Yeah.
And so when you're married, you merge those things. Even if you don't file your taxes together, they merge those things.
Yes.
So if you're recently divorced, can you still purchase a home, or what is some of the process? What's the process, Cenae, that you have to go through to independently start your financial portfolio?
Yes. So, yes, if you were recently divorced or currently subject to a separation agreement, you are eligible to purchase a new home. There would just be a few simple extra documents that we would have to provide. The first thing, that if you're separated, I will need a copy of the separation agreement, including all schedules. And if you are divorced, I will need a copy of your divorce decree. And I'll need that with all schedules as well. The primary purpose of that is to clarify how the property or division of real estate was scheduled. okay, by the court. So whether or not you're liable, that would show me whether or not you're liable or you receive any child support or alimony. So I actually I'm working with a client right now. He just actually went out and looked at a home with his realtor, and seen some items on his credit report, and he said those items aren't mine. He said those are my ex-wife's. I said, well, if you can supply me with your divorce decree, then we can get a rescore for you. And we were able to do that. We were able to get him a rescore and get him where he needed to be. And now he's out looking at homes. Just issue him a pre-approval letter. So he is excited and, on the path to also being a homeowner in the 21 days. We're only down about 6 days now. So he's excited.
So vice versa, if you're married and you're building your credit and you guys are buying a home together, because some people, the one spouse has better credit than the other, right? Should you both sign up for American Financial Network to work on your credit score, or is it okay to just one individual to work on it? How would you handle that situation outside of the divorce? They're married, right? So now we're looking at two financial situations.
Right.
Let's talk about that. Any one of you can grab that.
So, it really varies on what the couple wants to do. If they want to do it together, then we do it together. And if one of the spouses want to get look at their credit report and they may have, some issues there, then I'm going to do some credit counseling. But it's funny you said that, because I had two husband and wife who they wanted to do separate. He wanted to do, he just wanted to be on the loan. She did not. And then I had another couple where they wanted to do everything together. So as I pulled his credit report, I noticed there were some liabilities. And what I was finding is that maxing out on his credit cards. That's another factor, is that, guys, when you get credit cards and you're getting a huge amount on your credit card, don't go spend it all. Don't spend up to that limit. They say, for example, they give you $1,000 and you go out shopping and spend $900. You had 90% capacity of that credit card. Now your FICO score is going to decrease. We don't want it to decrease. We want it to increase. So I was able to put a plan in place for her and him and get their liabilities paid off. And, now they already been on their home. They were one of my first clients. And now they own a home. So it really depends on what do you want to do as husband and wife.
And I think also the key is income. Sometimes you need that secondary income to qualify for the house that you want. And so if that's needed, then definitely credit counseling is required for, the joint credit, because they're looked at as joint. But if that income's not needed by the spouse, then it's best for interest rate's sake to kind of, avoid that pitfall and try to maximize the best interest rate the one good credit score can get. Sort of thing.
Got it. So so depending on how much house you want, so it's an individual situation when coming to you guys. Got it. All right. So Sharlita has another question. She says, who is considered a first-time home buyer? Like if you bought a home in 2004 but lost it in 2014, do you qualify as a first-time home buyer?
It all depends on the down payment assistance program. For lenders, that first-time home buyer doesn't necessarily have any product per se. It comes into play when you're trying to tap into down payment assistance. Then it's, depending on that program, first-time home buyer may be needed for some programs in Maryland or DC. But it really boils down to their criteria. And not all of them say, you must be never a purchase. So 2004 till now, most of those first-time home buyer programs would accept that person as a first-time home buyer so long as they no longer own that property.
Got it.
Yeah.
That's great information. You guys are asking great questions, Sharlita and Michelle. And of course, if you have any other question, anybody that's watching, via YouTube, via Facebook. If you have any questions, now is the time to ask. Now is the time to ask. And of course, check out the information that's scrolling on the bottom. Sinai Baldwin, she's going to help you get into a home within 21 days. And if she reevaluates you, and it might take you longer, the 30-day process might be it, but at least you'll be on the route to getting yourself into a home. And as she's cleaning up this credit for you, as you're getting into your home, you're able to qualify for so many other things. It frees you up financially. So check her out, Sinai Baldwin. Thank you. I love you guys for all of the information that you're sharing. We're not done yet, though. So if you have any questions, you still have the opportunity to ask us within this next 20 minutes, right? So make sure you jump in, chime in, communicate with us. Let me see some hearts or some hand claps if you think this is great information that's being shared. And you didn't have to pay for the information. All you had to do was tune in tonight to get all of this great information. So, yep, I see a few hearts. I see a few thumbs up. Thank you, thank you, thank you. Show us that you are appreciating this information. Thank you, guys. Thank you. Okay, I think we're on the right track.
She's on my website right now.
Awesome. Yes. Wonderful,
yes.
Shalita. I love it. You got to give us your testimony too and make sure that you let me know that it's going well, like the process is going well as you are signing up for this information. Get the help, guys. Don't be leery about it. Get the help. And I love that we get to see the faces, right? So this isn't just a phone interview that we're doing on air. You get to see, I did talk to Cenae on the show last week.
Yes.
But now you get to see her face. You get to see these trusted women. You can follow them. You can, go to their website and get to know who they are. All right. So this is a great question because we haven't got this student loan forgiveness yet. So if you have a student loan, will that prevent you from purchasing your home?
Not at all. Not at all. There's so many programs out there. It's a debt. And so it's counted against you as a debt. Now, if you're leaning towards an FHA product, there's more leniency when it comes to a student loan versus a conventional product. But at the end of the day, it just can't be in default. If it's in deferment, that's fine. But default, we can't, any federal debt, IRS or student loan cannot be in default in order to get any kind of financing from any lender in America. So other than that, student loan just gets factored in as a debt. If we pull your credit, sometimes when you pull the credit and you see the student loan, it has 0 for a monthly payment. That can be in your favor because now the debt looks like it's 0, depending on the product that you're going for. Other products require to have some sort of, payment, or if depending on the product, but let's say you owe $10,000, we're going to take a percentage of that $10,000 and make that your payment as well. It really varies based on the product, but it won't stop you from getting a loan. There's no default.
That's good. I'm not going to tell you how many years I've been out of college, and that student loan thing is still haunting me because, started off just by paying the lowest amount. And so it just seems like it's never ending, like it doesn't budge based on that. You got to pay more so that it, more than just the minimum amount so that you can make it budge a bit. And so, I'm looking for Biden to do some stuff, hopefully, to knock this loan off. So Carlene Burke Fernandez has a question. She said, does one need a separate loan for making a first home accessible? Entry ramps, the buildings. So I'm thinking about maybe construction loans or anything like that. But do you need a separate loan to make a first home, wheelchair accessible is what I'm thinking she's asking about.
If you're purchasing the home, then ultimately the appraisal report is going to determine if the home is viable to move forward from a lender's perspective. Now, if you want to, augment the home in any way, there's second loans, there's HELOCs, there's renovation,
home improvement loans,
and things of that sort that can go in the second lien position to us, sort of thing. But ultimately, the key would be to purchase and then piggyback on a second loan after that purchase, sort of thing.
That's good. That's good.
And to piggyback on what you just said, Rodale, I also do refinances as well. Not only do I do the home ownership in 21 days and work with first-time home buyers, but I do refinances. I actually just completed a refinance. Couple wanted to refinance their home, and they didn't refinance, and now they're on vacation. They got some equity out of their house, and they were able now to go. I think they went to Aruba or Jamaica or somewhere like that, because they wanted to travel and they haven't traveled in a while. So they refinanced, and now they was able to get some money out of their home. So I do that as well. If anybody was wondering, I do that too.
That's so good. It's a great question. My husband is disabled, so we're looking for a rambler to avoid stairs. That's great. So yeah, and that's the great thing about being a homeowner is that you can build equity in your home. You can use it if you need if you're in financial strains. I mean, it's so much that you could do from being a homeowner. Owning your own home. Carlene says, great, thanks. Yes, for wheelchair. Most homes don't have widened doors, entryways, etc. And so, yeah, let them help you walk through the process of getting the home that you deserve, the home that you're able to navigate in, that they'll give you, the best loan options for the home that you might need. And I love that. I love this because you don't have to feel like you're a slave to whatever your financial situation is right now. We have answers. Cenae has answers for you. It can help you walk through the process of getting things done. And don't be ashamed because, like I said before, if you don't know much about the financial industry, you're not going to be able to navigate yourself. Get a professional to help you navigate towards the best financial situation, right? You could do the research if you want on your own, but don't be ashamed if you don't know the answers. Get somebody who does. Get somebody who does. And these ladies are trusted. So make sure you check out, log on to Cenae's website. So I was looking to see if we had any more questions. Okay, Karma Wigfall has this question. If you're paying for the IRS for taxes, will that stop you from getting a loan?
Not at all. Not at all. What has to happen, depending on the program, but typically this is the rule of thumb. We're looking for 3 consecutive months of payments. So, most lenders will say, hey, you can't just make a payment arrangement on taxes from 2012 yesterday and come to us and say, hey, I'm ready. I have a payment arrangement. We want to see some investment in good faith on the client's part. So 3 consecutive months of payment, then the lender's open to factor that into your debt to income ratio, because now it's a monthly debt that goes against your income.
Got it. So, one of the things that my husband and I was able to do was refinance for a lower interest rate, a shorter term, and we were able to pay off some money that we owed to the IRS. So we're in a really great position now because we're homeowners. And so we were able to refinance and make sure all of those things. So now we don't have that whole long 30-year term. We don't have, it's a shorter term. We were able to pay off some, the IRS, and we had a lower interest rate. So as your financial situation changes, the option of refinancing is also something that Cenae can help you guys with. All right, so Carlene has this question, and I'm hoping that you know what the NACA program is, but she says, can this program be combined with the NACA program? Rodell, I guess this is a question for you.
Well, I mean, at the end of the day, NACA is a great program. If you have the time to wait for NACA, it's a wonderful program. But we have very similar products in the sense that we offer down payment. I think the benefit to NACA is the fact that, there's no closing cost fees and there's no down payment and what have you. So there's programs we have that we merge with to offer no down payment as well. And as far as closing cost fees, we embed them within the down payment assistance or within the loan. We can factor and get creative. So no, the answer is no. We don't piggyback or merge with NACA, but we do have similar products that they have as well. Yeah, and a 21-day turn time versus the 6 to 9 months waiting period for NACA, because it's a fantastic program and popular, and so there is a wait period for it.
Got it. Absolutely. So even if it's not NACA, is what you're saying, you have comparable programs that you can use as opposed to NACA. All right. I love Karen Jackson's question. This is great. She says, with the interest rates increasing, because we see that with the Federal Reserve, right? Is that slowing down homeowners putting their homes on the market?
Well, at this point, it's one of those things where at one point it was a seller's market, and we're just kind of starting to see the slowdown. Why? Because the interest rates are increasing to the point where it's not affordable anymore for a lot of people to be homeowners. Like I said earlier, it's the income that really determines qualification. It's not the credit score. All of those things can be manipulated. It's how much house you can afford. And so the sellers, exploited the circumstances initially by increasing these prices, and it became such a bidding war, and people were going over the appraised value. But the bubble has burst because the interest rate is high to the point where, and we offer the best, competitive rates that are out there, but the feds are doing what they're doing that we have no control over. And it's to the point now that sellers recognize that they have to get back down to reality in order to have someone with their income and this interest rate afford to purchase the home, or is this going to sit on the market?
Because at the end of the day, they want to sell these homes, right?
That's
At the end of the day, they want to sell these homes. And so with that being said, it's about how much money you have with the interest rate and, and the programs that'll help you. So, any given time is a good time to be a homeowner, I think.
Absolutely.
Yes. All right. So one other question. I have collections on my credit report. Can I still purchase a home? And I think Cenae has been talking about the collections and the derogatory reports, but somebody wants to know, if I have collections on my credit report, can I still purchase a home?
Absolutely. Absolutely. Typically, the marker is $1,000 or more. $1,000 or more, depending on the program and a lot of other scenarios. The factors that factor in is credit score, loan to value, how much house, how much debt, all sorts of various things. But generally speaking, if this collection is $1,000 or more, yeah, it needs to be taken care of. It needs to be paid. There needs to be some sort of arrangement. If it's under 1,000, if it's a medical, there's more leniency on that collection where it doesn't necessarily have to be paid off, depending on all the other factors, the little puzzle pieces that all have to connect. Yeah, so you can still purchase.
That's where I come in at, to look at your credit report, to see what collections we're looking at, what the derogatory items we're looking at. Let's get a clear view of this credit report to see what is holding you back or what's preventing you from actually being a homeowner. So me going line by line, like I mentioned on that credit report, we're going to address each of those items and, create a plan to get those liabilities paid, get those collections paid, so we can do a rescore of your credit to get you in position of home ownership. There's people that I know that, I have collections and I just don't think, I qualify and this and this. Don't let it be excuses. Apply and see where you are. Go to my website and apply, put in that application. You would never know, not unless you put in that application. And then I can talk with you and tell you where you are or what we need to do, or you may even just qualify. Who knows? But we won't know until you put that application in and let me see exactly where you are so we can set a game plan together so you can become a homeowner.
And then you're that much closer to becoming a homeowner because you took the first step. This is why you guys do what you do. I love what Shalita says. She says, you ladies have me in tears because I know God sent you here to help me and others like me. Thank you. We're tired of paying rent.
Yes.
And that's what this is all about. This is all about financial freedom. It's about taking the first step. You don't know how to do it yourself. And a lot of us are guilty of making a mess of us trying to do it ourselves. Let the experts walk you through this whole credit situation. Get your credit cleaned up really well so that you can apply and that they can present to you the best programs that's best for you, your family. And so you stop making the landlord rich. You can become a homeowner. And I know it's nothing like having your own. It's nothing like it. We just came out of this pandemic and we had to spend a lot of time in our own homes. And I tell you, sis, I was so comfortable and so excited to just be home, to be at my house, right? And I want that for everybody. I want that for everybody to say, this belongs to me. And
Absolutely.
making your house that house of peace, making your house that place where you can go to get solace, that you can get, you that it's just yours,
Mhm.
right? It's
Yeah.
yours.
You turn that key in the door and say,
Oh,
"This is mine. I own this.
Mhm.
This is
I
my
own
home."
this. I
Opposed to
own this.
turning that key in, and yes, you have a roof over your head. However, each time you're paying your rent, you're paying it to, a landlord that, you're still renting. Like I mentioned that story, she paid over $97,000 in
Mhm.
rent.
Mhm.
Just imagine. Who wants to continue to pay rent after rent after rent when you can be in position to become a homeowner? And allow me to help you out in the process of seeing what needs to be done so we can get you your home.
Mhm.
Absolutely. Leave a legacy.
It's a
Absolutely.
legacy. It's a legacy. All right. So we've got about 5 minutes to go, but I want to make sure you guys have final say, right? I want to make sure, if you're talking to individuals or those who are watching, thank you to those who are watching on YouTube and Facebook. Thank you for sharing it on your page. Thank you for engaging. Thank you for the questions. We're praying that we're able to give you some answers that you need. And I'm praying that you're able to log on to Cenae's website and get the help you need to be in a better financial situation. But I'll give you guys the final say. Cenae, if you're talking to our audience, what is it that you like to drive home? And then Rodell will also allow you to do the same.
I would like to just thank everybody for tuning in and watching and hearing all this wonderful information because it's so super important to be in a path to home ownership, any financial freedom. And financial freedom, starts with, being educated. Like I mentioned earlier, you being financially educated with owning a home and, leaving it to your kids. That's generations, that's part of the reason I got into this business. So I'm just thankful that everybody's watching. And I want, you guys to go to my website and, put in an application. Let's see where you are. Let's see what can be done. Let's get you in that home that you want. Let's get you in that dream home. And I'm here to help you through every inch and step of the way.
Awesome.
Absolutely. And
Rodell.
the key is starting before you even come to see Cenae. There's some pointers. It's your credit. It's about your credit in terms of where you want to be with it. So make sure you have minimum 2 major credit cards, minimum 1 retail store card, and a minimum of 1 personal loan. Student loan constitutes a personal loan. Don't get these cards to max out because that's going to hurt the score. Get the cards just to be able to empower yourself and control your credit. Don't let credit intimidate you. Look up the FICO score module. Get yourself familiar with the formula that the bureaus are using in order to determine our scores monthly. So by the time you get to purchasing your home and coming to see Cenae, you have a foundation that she can work with and build off from there.
All right. These are some great tips. And you guys, I didn't have to pay a dime to get all this information
Pick
that
up
you
their phone and
need.
call.
Right. You didn't have to pay a dime. All right. So Shalita's telling her husband, she said, Ike the musician, Wiley, we're headed to home ownership, babe. I love that. I love that. You got to take the first step. A lot of times we just want to ignore the bad stuff, right? We don't want to face the fact that our credit score is so low, or we don't want to face the fact, we don't want to see all the damage that's done, but you got to start somewhere. You got to start somewhere so you can be that much closer to home ownership. And so why not call Cenae, and get all the information that you need to help towards your financial freedom, number one, building your credit and getting into home ownership. Take the tips that Rodell just said, you know what I mean? Apply for some credit cards. They don't even have to be high limit credit cards, right?
Secured cards. Secured cards is where you start if that's where you have to start. Absolutely.
Mm-hmm.
A secured card is equal to the same
So secure
equivalent of
cards
a
are the
regular.
cards that you put money down on.
Absolutely.
Yes.
That's
You start there.
that's so good. So started with a secure card, but you got to show the history of you being able to make payments.
Yes.
So again, Shalita, I can't wait till you get into your home. I know you're calling Cenae, and to anybody else that's on. We thank you so much for joining us. I love these heart-to-heart discussions because we're able to give our audience some great information for absolutely free. And this will live on our website at praisedc.com, myspiritdc.com. It will live on our Facebook page. So you can always go back and check out the information that we shared today. But just to get started, look at the banner below, call Cenae and let her help you get that credit correct and help her let her help you get into this home in 21 days.
That's right. Home ownership. Let's get it, guys.
Home ownership. So that's going to do it for us. This is our heart-to-heart discussion, home ownership in 21 days. Cenae, thank you. Thank you.
You're
Thank
welcome.
you.
Thank you.
Odell, thank you. Thank you. This has been so much great information. And listen, be sure to lock us in to Praise 104.1 and Spirit 1340 if you're in the DMV. And of course, you can listen online, praisedc.com and myspiritdc.com. That's our heart-to-heart discussion tonight. Thank you for joining us.
Thank you. Thank you for having us.